Welcome back. In our top business story, the Dubai Department of Economic Development announced the launch of a quarterly consumer confidence index to evaluate the sentiment among shoppers and their impressions on the state of the economy. The index will also provide an overview on spending patterns, household incomes and savings among consumers in Dubai. The first index will be published by the end of the last quarter, so probably in December. The index is intended to provide a realistic assessment of consumer perceptions on economic changes as well as their future intentions and expectations, Sami Al-Kamzi, Director General of the Department of Economic Development, said. A clear understanding of consumer response to economic conditions and expectations will help governments and business owners in economic planning and decision-making, he added. A delegation from the Ministry of Finance, including Obaid Al-Tayr, the UAE's finance minister, participated in a G20 conference on commodity price volatility held in Istanbul in Turkey yesterday. The conference addressed the currently volatile commodity prices and how they affect the overall economy. Benchmark US oil, the WTI price, fluctuated between $72 and $115 a barrel in the past 12 months. That is a volatility of $43, and the European benchmark Brent oil traded between $74 and $127 a barrel. That is an even larger difference of $53. Attendees at the G20 meeting also discussed the roles that stock markets have on price fluctuations, relations between economic and financial markets, and methods of preventing market abuses. These days, for many Indians living and working in the UAE, the exchange rate between the US dollar-pegged dirham and the Indian rupee looks very favorable. 1 dirham is currently worth just below 13 rupees. This results in workers sending more remittances home to India, several exchange houses told a local paper. Reason being that the dollar and with it the dirham is on the rise, mainly due to the ongoing European debt crisis. With that, dirham wages converted into rupees are worth more, likely to result in busy business at the UAE's exchange and money transfer outlets. However, the money should be spent quickly as India's inflation accelerated to the highest level in more than a year to 9.8% in August from a year earlier, after a 9.2% jump in July. Stocks rose today amid speculation China may still offer Europe its support even after Premier Wen Jiabao said countries must do their homework themselves and not rely on China to bail out the world economy. More on that in a little while. Let's first look at the stock indices across the GCC. In our world business news, the IMF, ECB and the EU, the Troika, is today back in Athens to check on its austerity progress, a prerequisite to receive the remaining 8 billion euros of the first bailout package, the three bundled up for Greece. Meanwhile, deposits at Greek banks fell 19% in the past year and almost 40% at Irish lenders in the past 18 months, according to Bloomberg data. And also the interbank money market is drying up further as EU lenders are lending less to one another. This, together with their exposure to Greek debt, is why Moody's cut the rating of two of France's largest listed banks, Crédit Agricole and Société Générale, by 1 notch. The ECB is reacting on these news by giving banks as much money as they request. Plus, it is again said to be buying bonds on the secondary market to push down yields and stop the debt crisis from spreading, for instance, to Italy. That, however, is looking more and more likely. At a bond auction yesterday, the Italian Treasury had to pay bond investors record yields for its 5-year paper, which underlined mounting fears of the state of the currency bloc's third largest economy. Also, a Greek default is looking more and more likely. We earlier asked Philippe Doba-Pantanac, senior economist at Standard Chartered Bank, how the fixed income market perceived these high Italian bond yields, how likely a Greek default is, and what that would mean.
Well, Italy had to pay indeed record interest to sell its bonds yesterday, as it really raised to calm market fears that it's losing control of a huge public debt, the biggest Eurozone public debt, which could trigger a crisis which would endanger the whole Eurozone. So basically yesterday at the auction, the Treasury sold 6.5 billion euros of long-term bond, but they were forced to pay 5.6% on a 5-year paper. And basically that yield was the highest since the introduction of the euro more than a decade ago. And that really underlined the growing investor concern about the sustainability of the 1.9 trillion euro public debt mountain. Now, what's for sure is that in the very short term, indeed, all eyes are back on Greece again. And our market really remain on the edge, awaiting details about the progress on the next tranche of aid for Greece. And what's happening really right now is that market are expecting an imminent Greek default indeed. But more importantly, they are eyeing the form of the default, if it's going to be disorderly or orderly. If we get an orderly default, market could stage a huge relief rally. But all bets are off if the default is a chaotic one.
While the European and the US economies are showing signs of weakness, the world puts up its hopes for economic powerhouse China to pull everyone else out of the mess. Therefore, investors breathed a sigh of relief when Chinese Premier Wen Jiabao signaled a cautious monetary policy to avoid hurting the Chinese economy. Speaking at the World Economic Forum in northeastern China, Wen also said his country would forge ahead with structural reforms and boost domestic consumption to sustain long-term economic growth. He vowed to keep a tight lid on inflation following a drop in annual figures from a 3-year high of 6.5% in July to 6.2% in August. He also said China was willing to invest more in European countries, but repeated, just like US President Obama, what is most important now is to prevent the sovereign debt crisis from spreading. Yesterday, the market speculated China could be buying up Italian bonds. Before we go, here's a quick overview of the oil, precious metals and currency markets. And after that, we have the day's sports news for you.